Hello guys, it's Max here from Daily Market Movements, and just before I start today's video I just want to make you all aware of the trading signal service that we provide here. If you'd like to receive trading signals from either myself or the rest of the team here at Daily Market Movements, and you can do so simply by visiting our website at www.dailymarketmovements.com. Once at the website, you'll then be able to purchase our service for a very small fee of $249 for a year's membership. So it really is great value for money. I'm going to leave our website link below this video in the description, so if you do want to join, simply scroll down now, click on the link, which will then take you to our website. So in front of me is the gold over the US dollar chart, and as you can see today we have rallied back towards the upside. I did forecast this from yesterday's video. I said that we did kind of form a slight hammer candlestick, which is typically a bullish sign, and it does indicate that the following day we will rally, and that's exactly what has happened today. We're now trading back up towards 1950, so we're at 1947, so only 3 points away from that midway point between 1900 and 2000. I did forecast for us to trade back up towards 2000, and that's exactly what the market's done today. With the stock market has bounced. If you watched my videos yesterday, which I covered on the two indices, so the S&P 500 and the Nasdaq 100, we then come into contact with the 50-day EMA on both charts, and I did expect some buying around those levels and see a bounce in the stock market today, and that's exactly what's happened, and I think it's dragged gold up with it. There's plenty of fundamental catalysts as to why gold should be rallying. I sent out a voice note actually this morning in the Signal team, and I was explaining about how much money the Fed actually printed back in 2009 financial crisis, and that's when gold hit its all-time high, which was in 2011. So about a year and a half, 2 years after the actual recession hit the US economy, and the Fed printed a total of $530 billion. Well, come this time round, between the government and the Fed, there's been an excess of over $3 trillion which has been printed and injected into the US system. So that just tells you a story of how high we could potentially go here with gold. And the most interesting fact about that is that we actually gold hit its all-time high in 2011, which was, remember, a year and a half to 2 years after the actual crisis hit. So that tells us that this could be a new bull market for the gold markets. We could be rallying for the next couple of years here, and I don't think that this is that we have run out of steam around these levels here. I think we're just recharging our batteries until we get that next sprint towards the upside. Remember, this is how gold works. We kind of trade in these holding patterns for 2 to 3 months. Sorry, for 1 to 2 months, so anywhere between 4 to 8 weeks, and then all of a sudden we get a massive breakout towards the upside, and you can see gold rally anywhere between $100 to $200 within a couple of days. It really is exciting stuff to watch and be part of, especially when you have some buy positions open. So that's what I think gold is doing at the moment. We're kind of recharging our batteries within this $2,000 to $1,900 level, and then eventually we will get that catalyst which will push us that next leg higher, which could be to $2,300. That's the price target that Goldman Sachs has on gold at the moment. That's their 12-month price target. So I think there is some great opportunities here to make money on gold. We saw yesterday that we tapped that 50-day EMA down at 1900, and there was evidence that the buyer stepped back in and pushes back towards the upside. So it's obvious now that the $1,900 level is the key supportive level in this market, and that the bulls will support it. So there's a great opportunity here for a brilliant risk management trade. You can put a buy anywhere between 1900 and 1920. You could have your stop loss just under the 50-day EMA, let's say at 1880, with your take profit back up at 2000. That's two areas where we've tapped twice before, obviously here, and then obviously we tapped there a couple of months ago, and we nearly got there last week, about 2 weeks ago, but we just fell short at 1990. But I think now that's exactly where this gold market's heading. I think we're going to head back down towards 2000, try and tap it, and if we can break above it, that's when we go looking for 2100, which is of course the all-time high. Well, the all-time high was at 2073. That's where we hit about a month and a half ago. So exciting times here on the gold markets. RSI is looking healthy. I'm a buyer of gold, no interest in selling as long as we're trading above the 50-day EMA.